Welcome back to the Market Pulse. Today we're joined by John Frewin, Marex's new global head of OTC clearing sales, to talk about the changing FCM landscape. John, you've spent much of your career in the institutional space before joining Marex a few months ago, and we've seen a rise in the non-bank FCMs recently. What is driving that trend?
Yeah, that's a great question. I think probably it's two main reasons. I think we've certainly seen on the banking side, a reluctance, if you will, to sort of extend the supply. Derivative clearing, it isn't straightforward. There are inherent costs, both from sort of a capital perspective, but in terms of ownership. And we've just seen more products, more firms come into the market that require derivative clearing, whether that's just mandatory regulation, or just whether simply just new hedge funds being launched, etc. I think similarly, with firms like Marex, what we've seen is just a drive and innovation. And for Marex in particular, not just sort of following the launch of 2024, but being investment grade rated, suddenly more firms can come to us and sort of, I think sort of say, yeah, actually we can add you to the panel. We can have a Marex. We're looking for a non-bank FCM.
Hmm.
We sort of get the joke about having a slightly more dynamic mix. Obviously, if we look back to sort of what happened in sort of financial crisis,
Hmm.
one firm almost took down another firm, almost took down another firm, and
Hmm.
to sort of move away from that and actually sort of move away from some of the sort of bulge bracket banks and move to some of the non-bank FCMs, I think is a sensible mix, and we're certainly sort of benefiting from that and our clients.
Hmm.
And I think at the same time, we're just seeing firms like Marex really sort of innovate. And rather than sort of stay in the central lane of just sort of clearing the vanilla products, when we sort of look at what our clients are asking us for, whether that's around innovation in the digital space, whether it's innovation in the commodity space, or even just cross product margining, across equities, fixed income,
Hmm.
across the OTC and the listed space, firms are coming to us really where perhaps gaps are emerging in the sort of traditional providers of clearing,
Hmm.
if you will.
And can you explain to us the differences between a bank and non-bank clearing model? How do they complement one another?
Yeah, I think you're right to sort of say, why do they complement each other? I don't think it's you choose one or the other. The banks have always had their specialisms. Okay, whether it's prime, whether it's clearing, but it tends to be these firms have a preferred list, if you will, a platinum list of clients that they tend to wish to work with and for. And invariably that means trying to sell sort of all of the services rather than sort of one or two key services. And not so much that you sort of become a jack of all trades, master of none, but maybe there's occasions where sort of square pegs are trying to be forced into round holes. I think also the regulatory burden or the capital burden that has come with the cost of clearing for some of the banks just means that actually offering derivative clearing to your clients, it's not a cheap pastime. It's an expensive thing to do.
Hmm.
Exchanges are always adding new products. There's always new markets. There's always new currencies. And if you sort of stand still, you start to go backwards. And therefore, you have to continually be investing in your clearing platform. That means that we've certainly seen firms pull away, and therefore that's allowed a space for the non-bank FCM to come in.
Hmm.
Um, and then what is it we perhaps do that's slightly different? Well, we do derivative clearing. We do execution. We tend to sort of be much more sort of specialist in that space. And again, I think a key part of that is the innovation. It's bringing products, exchanges, ideas to our clearing counterparties that perhaps they're not seeing in the banking space. Certainly
Hmm.
things like cross-product margining, certainly being able to sort of go to the margins of, you know, some of the sort of slightly less liquid commodities.
Hmm.
Or again, when things like, prediction markets come, to the fore, we're one of the first with our hand up to say, yeah, let us look at that for our clients when we're getting the demand.
Hmm.
Whereas again, for some of the banks, it's more difficult to sort of
Hmm.
onboard some of those products to the existing platforms.
You've mentioned innovation quite a few times. There's clearly been a lot of traction in the regulated digital asset space. and we've been involved in a number of initiatives. As a non-bank, how do we maintain our edge whilst balancing innovation and risk to best serve our clients and counterparties?
Yeah, I mean, obviously, a lot of the digital assets are seen as sort of, nascent products. It's something new that's come to the space. People are often fearful about new products, new technologies. Certain ones that haven't been around, like decades, like some of the commodities have. Again, I think for firms like Marex, it's a real sweet spot for us. We looked at the digital asset space. We have an awful lot of hedge fund clients and institutional clients that ask us to get involved in the space. We feel comfortable in doing so. So much of what we do, from the top of the firm down, we are inherently risk managers. And so when we look at some of the digital products, so people tend to sort of shy away from those. We just see it as a good opportunity. We have our arms around the risks, we have our arms around the products, and our clients are asking us to, provide the platforms and the clearing services, so that they can get involved as well.
Mhm.
And again, we've obviously we saw some of the upsides of the various Bitcoin basis trades. Um, the very nature of basis trading is it tends to be sort of there one moment and gone the next. Um, and for us to sort of onboard clients, we could do that very, very quickly. We can move. We're sort of talking, hours and days rather than sort of weeks and months. And so again, we got an awful lot of client take up on the institutional side with the recent Bitcoin basis.
Mhm.
And again, I think that's just another reason why firms come to Marex. They sort of see the speed of onboarding and the innovation sort of going hand in hand.
Just to pivot briefly to regulation, with the final Basel III rules coming into effect over the next couple of years, how do you see that changing the market?
Mm. Yeah, I think with Basel III, you're just, sort of in a nutshell, if you will, you're just seeing increased regulatory capital burden on the major banks, and um, it just goes really to the thinking that actually just providing derivative clearing isn't the cash cow that everybody thought it was when this was sort of launched sort of 15 plus years ago on the OTC side at least. And simply the cost of ownership, the cost of owning, providing derivative clearing services to your clients is an expensive one.
Hmm.
Not just in terms of making sure you're keeping up to speed with exchange developments, but just the regulatory burden and the capital burden that comes with it. Um, and therefore, you have seen a contraction in this sort of
Hmm.
supply on the banking side, if you will. But of course, the demand continues to rise.
Hmm.
More firms come into the space and need derivative clearing.
Hmm.
More products get added by the exchanges, and then you sort of have that juxtaposition where actually the supply is far outstripping the demand,
Hmm.
and we see people pull back. Um, and those regulatory capital charges, they're not necessarily going away, and so we've been able to see as a non-bank, we've been able to sort of benefit, from those charges that the banks are taking on board now.
Thanks, John. Really appreciate your time.
Thank you.
If you'd like to read more of our thinking around clearing and related developments, you can find additional insights in the Marex.com newsroom. You can find the link above. Next time, we'll be joined by Michael McQuillan, Head of Neon Metal Sales. We look forward to seeing you then.